Okay, I'm gonna give you a walkthrough or a top-down analysis on how I caught this beautiful buy on Nasdaq for a 1:6 to reward ratio. So as usual, the analysis starts on the weekly time frame, and I'm gonna clear all analysis that I have on my charts, and then it starts from the beginning. Like in my previous video I showed, I pay attention to what the market is doing most recently. Let me get my favorite tools. I pay attention to what the market is doing most recently. That's what I basically pay attention to, because most recent market price action is what will tell you where the market is most likely to go to moving forward. So what I just did was to, as usual, pick out my area of concentration structure wise. So from this point, you can see that this was like the recent high and low that we had, and now currently the market has pushed above it, simply telling us that this market is in a super duper uptrend. So after that, I went down to the daily time frame. On the daily time frame, I spotted Friday where the market closed on Friday. I missed a very good buy opportunity on Nasdaq initially, and you see why. So I spotted that this is where the market closed on Friday. That's last week. The previous week before this week we traded. All I did was to look to the left. That's when I saw that this market recently broke a structure here, market structure break here, and after that, what happened next? A normal typical inducement right here. Inducement liquidity, inducing early buyers into this trade to buy to the upside, and then later on the market usually comes back to take out that inducement. So if you look right below this inducement, you are going to see that there is another block. If you might want to put it that way, there is another block right here. Let me adjust this properly. There is another block there, and look at how the market came and tapped into that other block and then started pushing up. I didn't catch that buy, but you see how I was also able to take a trade from this Bitcoin setup. Let me adjust this properly. So I would also adjust this thing to this point here. So that's basically it. So all I was looking at was after the market tapped into that other block, started pushing up, I knew that the next draw on liquidity will be at this high. But before these highs, there are also eternal draw on liquidity that will have inside this external draw on liquidity. We'll have this draw on liquidity, or have this draw on liquidity here. And most times when I'm trading, to be on the safer side, I tend to take my trades out on the internal draw of liquidity, which is inside these recent highs. So after I spotted this, I went down to the 4-hour time frame. I think by the time I was looking at Nasdaq was already somewhere here. I think it had recently broken above this particular high that we have here, this particular high. So when market took that high out, I knew that the next thing the market would most likely do was to continue pushing to the upside. Okay, we left 4 hour. Okay, that was 1 hour time frame. Coming to the 1 hour time frame, I saw that after the market tapped into this other block, started pushing up and started making continuous high highs and higher lows, shifting structure to the upside. So what I did was to go down to the 15 minutes time frame to just see how market is building up. So I will just simply adjust this to the past here because that's no longer in view. So what I saw here on Nasdaq, I think I was looking at Nasdaq right somewhere right about here. That was where I was looking at Nasdaq. So what I saw was that after this market broke this structure here, typically, the market would always come back to leave an inducement. And what happens when there is an inducement? The market comes back to take out that inducement, liquidate it, to create more liquidity to continue pushing price to the upside. And usually after an inducement, there is usually a point of interest, be it order block, fair value gap, supply and demand, whatever it is. So I saw that below this below this inducement, there was another block there, or demand level, whatever you want to call it, that the market failed to mitigate. So I know that also all I was waiting for the market to do its thing, then come take out this particular liquidity, inducement liquidity that we have here, then tap into this order block or point of interest, then I can look for that trading opportunity to the nearest eternal draw on liquidity. I think I was going with this one. No, I went to this high one here, nearest draw on liquidity, but I know that this was like the external draw on liquidity too that the market could potentially come into. But like I said, to be on the safer side, I like going for those internal draw on liquidity. Most times I leave some positions to run all the way into the external draw on liquidity. So that was basically it, and after which, let me bring this out, after which I went ahead to place my buy limit on that other block. I think I placed my stop loss was somewhere around there, somewhere below that other block level, and then I targeted that internal draw on liquidity. Internal draw on liquidity. And yeah, the market went straight for take profit for a 1:7 risk to reward ratio. So usually break of structure, wait for the inducement, look for POI below those inducements, put your buy limits there or sell limit depending on the direction the market is going to, and then leave the rest for the market to play out. And as you can see, after taking out this internal draw on liquidity, the market continued pushing up. So it's just basically reacting to what the market is doing and then following market structure. When I talk about market structure, I mean market trend. So that's how we got this beautiful 1:7 risk to reward ratio trade on NAS 100 right from this point here. Right from this point for a sweet sniper entry. So I hope you enjoyed the video. Please do subscribe and leave a like. Catch you on the next one.